Hello, my name is Shreyans Jain and welcome to my channel. Today we will be discussing about the technical analysis. It is an introduction to the technical analysis and this is my first video in this series. Going forward, I will be putting more videos explaining more detailed concepts of the technical analysis and how we can use technical analysis in making your investment decisions in shares and how which can help you to earn money. Uh, to start with, we will start a dilemma which is being faced by every investor into their day-to-day life. We'll discuss it. There are few questions which are always there. Is it the right time to invest? How to identify the investment opportunities or what securities to invest in? The investment value falls as soon as the investment is made, and limited time to do a detailed research or analysis of financial economic scenario or other fundamental aspects. And you come to know about the investment after it becomes expensive. Suddenly one fine day you come across a news article wherein you see that one person, he invested in company A 2 years back, and now this company, the share price has increased 10 times. Now you are wondering that how this particular person identified this company, why you were not able to identify, what were the reason, what were the triggers, and then we start looking at the reasons, and by the time it's already gone, right? We already lost the opportunity. So we need to answer all these questions, that what is the right time to invest, how to identify the investment opportunity, how to ensure we make the investment in right time so that the investment value does not fall as soon as we invest, and how can we do better utilize our time, and how to focus on only on the shares and to research on the financial and the economic scenario only for the shares which we are interested and which we find that they can be good investment decisions, and how to identify the investment opportunities which will be very big going forward. So all these questions can be easily can be answered with the help of technical analysis of the share. But please understand, technical analysis is a big subject, and today's video is only limited to the introduction of technical analysis, and I will be posting more videos explaining the concepts about the technical analysis. Let's first understand what is technical analysis. Technical analysis is the study of price action, volume, and technical indicators of investment opportunities with an objective to identify the securities. Securities can be anything. It can be shares, or it can be bonds, or it can be debentures, anything, or assets where investment can be made. So basically we study about the price, we study about the volume, and then we study about the technical indicators with the whole sole objective to identify where the money can be invested and maximum profit can be done. How does the technical analysis help? Let's see what are the how does it help and whether it is helping in addressing some of the dilemmas which we discussed earlier. Using technical analysis, large number of securities can be scanned in very short time. So using this, the one of the major concern we face that we have limited time and we cannot scan all the shares, like there are approximately 4,000 shares listed on BSE and NSE. It's not possible for us to scan all this or to do a detailed research, but with the help of technical analysis we can scan the shares, a large number of shares, and then we can identify few shares wherein then we further want to do the analysis or the fundamental research. But before that we want to focus that yes, these are the share in which the movement is happening. Technical analysis helps you to identify the market trend. What is market trend? Market trend means whether the market is going up, whether the market is going down, or whether the market is there is no direction. So technical analysis help you to identify the trend and decide what is the right time to invest. Technical analysis helps to time the entry and exit from the investment. So with the help of technical analysis, you can decide when you want to make the investment and when you want to exit from the investment, and helps to determine the best entry price and target price of the security. With the help of technical analysis, you can make or you can determine that yes, at this particular price I should enter and at this particular price I should exit. Key point to be noted: technical analysis which help you to identify the shares, but before making any kind of investment decisions, you should perform your detailed research before you can commit any kind of investment to any shares. What are the key focus points? Let's talk. We will be talking about what is technical analysis. We will be also talking about the major premises of technical analysis and the benefits of technical analysis. Please note, this particular video is only the introduction. Going forward, or I will be posting more videos explaining the different concepts of technical analysis in detail, which will help you to understand the concept and use it in your day-to-day or in investment decisions. What is technical analysis? Technical analysis is the study of what? Study of price, study of volume, and the technical indicators with the only objective to determine the future price trend. So we study the data as on date. We study the as on date or the past data related to price, related to volume, and related to technical indicators. And what you want to do, we want to determine that what will be the future prices. We'll see this in few of the examples in next slide, and wherein we'll try to understand that how reading the price, the volume, and technical indicators we can determine the future prices. Let's take an example of Reliance Industries, and let's talk about point number A. This is the first bar. You see, the first bar is red. So this red bar, what does a red bar tells you? The red bar tells you that the closing price was lower than the opening price. When the closing price is lower than the opening price, then you see a red bar, and when the closing price is higher than the opening price, you see a green bar. In share market, closing price is given more weightage than the opening price. They say that the closing price is taken based on the informed decisions, and the opening price are done uh, by the people who do not have any information, and the haywire decisions are taken. So less reliance is made on the opening price and more reliance is made on the closing price. So we should always focus, we should always try to make our decisions based on the closing price. This is a major concept. And if you see the red bar, it says that at the end of the day the prices were low as against the open. Now what does this bar say? That yes, it was low. Next, and let's look at the let's look at the related aspects, which is the volume. Okay, here if you see, the volume for this particular day is low. So there was low volume, the opening was high but the closing was low. And look at the technical indicators. There one technical, the few of the technical indicators which I am using here are momentum, RSI, and MACD. What are these technical indicators? And apart from these, many other technical indicators I will be explaining in my future videos. So what is happening? If you see, the volume was very low, that is there is very less buying interest in this share. The momentum is going down. Basically it is supporting, it is also saying that the momentum is there is no momentum in the share. RSI signifies relative strength. It shows that share is not showing any strength. And MACD, the blue line shows the 12 days moving average, and the red line shows the 26 moving average. And you can see that the blue line is trying to go down, meaning to say that the latest prices are going down than the old prices. Okay, we just saw red bar, but we are not making any decision. we saw the second bar. Okay, herein in second bar we saw that the again it is red bar, meaning that the closing price was lower than the opening price. Now here what does it signify? It says that, you know what, the prices are not able to go up, which is being further confirmed by the volume, the momentum indicator, the RSI indicator, and the MACD. Now if you are already invested in Reliance Industries, you want to take an exit here, meaning you want to sell your positions because you want to save your capital. Please note, in share market we say that preservance of capital is more important than earning on capital, because if there will be capital, then only you will be able to earn. If there will be no capital, how will you earn? And market gives you a tremendous opportunity up every day. So as soon as, if you are already invested in the share, you want to take an exit at this point in time, because it is signifying that yes, the prices are going down. Come to point B. Day 1 we saw a green bar. Green bar again signifies that the closing prices were higher than the opening prices. So what does it mean? It means that the people are becoming positive. At the end of the day, they want to take the delivery, right? Let's look at the volume here. The volume shows that the volume is not big, but still the volume is still not great, but there is not a significant selling pressure. Let's look at the momentum, which is a technical indicator, and technical indicator is showing that it is going up. It is started showing strength. It is going up. It is in direction of the price. The price is also going up and the momentum is also going up. Similarly, the RSI is also going up, and the blue line, which is a 12-day moving average, it is trying to go up. So at this point of time, I say that yes, the share price is showing some strength. I will wait for day 2, and again I see, but that on day 2 again the prices are high, and even the lower of the previous day, it is not teaching that. Even in fact, it is not even touching the higher of the previous day. At this point of time, I can see that yes, my prices are in uptrend, my indicators are in uptrend, and I have got support from MACD also. Now I can make an investment. Basically, I can commit some investment. But before making any investment, please conduct your research, please conduct your analysis, because technical indicators give you an idea of what is the price trying to show. The prices are trying to show that the prices will increase. But before committing your investment, before committing your capital, you want to be ensure that yes, everything is going fine, and you can commit your capital with confidence. At this point, after this point, you can notice that it is started at approximately 950, and from 950 it reached approximately 125 till point number C. Now let's look at the point number C. What happened at point number C? Day 1 is a green bar, which is good for us and we are okay. But look at the day 2. Day 2 again, it is a red bar with a high selling. If you see, the volume has significantly raised. Now if you see, it is going down. Now this downtrend is also confirmed by the momentum. It is showing that yes, it is trying to go down. This downtrend is also confirmed by the RSI, and this downtrend is also confirmed by the MACD, and everything is in downtrend. Now at this point of time, I again want to take an exit, because I want to save my capital. I do not want to take any further risk, and I want to take an exit here. Please ensure, as I mentioned, we need to save our capital first, and as soon as you see anything negative related to your capital, you should take exit. we Now let's talk about point number D. Again, point number D, you will see that the day 1 it is green, which is being supported increasing volume, which is being further supported by a rising momentum and a rising RSI and a rising MACD. When you see everything is rising, then you can consider investing on the day. On day 2 again it is the same, day 3 it is again the same, and on day 3 you can consider investing, because day 2 has shown that yes, it is going up, and then you got a further confirmation from the MACD and the momentum and RSI. In technical analysis, we always believe that the price is the first indicator, or the price is the leading indicator, but price needs a support, or price needs a confirmation, and the confirmation are always provided by the technical indicators. So we always look at the price, that what is the prices are trying to say us, and based on the price we look at the technical indicators, which is a volume and different and number of different indicators, to understand what are they trying to show. Where if they are providing a confirmation that yes, price is showing the true picture, then we can commit the investment. Let's take an example of TCS, which is a different industry altogether, different from Reliance. TCS is coming from the IT sector, Reliance is coming from oil and gas. But technical analysis, that's the beauty of technical analysis. It does not differentiate between the industry. It does not differentiate between the shares. It does not care about the promoters or anything. Technical analysis follows simple rules. Technical analysis rules are so simple that you can, if you know the programming, you can convert them into programming, and then those programs can give you alerts that these are the few different aspects which are being followed, or which are being confirmed by these indicators, and then you can make a decision whether you want to sell or whether you want to buy. Let's look at the point number A again. On the day 1 it was a green bar, right? On day 2, so green bar we are okay because price action is saying go up, but we are not going to make the investment yet, because when we look at the technical indicators, we see that although the prices are trying to go up, but the technical indicator is not confirming the price. Technical indicator is not going upward. Similarly, my RSI is not going upward on day 1, and my MACD is also not trying to go up. Here I can say it is trying to go down, so I will not take any invest because it is not confirming. On day 2, what I see that yes, there is a red bar, meaning to say that the closing price are lower than the opening price. Now let's look at this. What is happening? The volume is low, and now this red bar downtrend is confirmed by the momentum, by RSI and MACD. Okay, now at this point of time, if I am already invested in TCS, I want to take an exit, right? But I do not want to take a new position, but I want to take an exit because I think that something is bad, something is wrong, and I should take an exit, and I will take an exit. And you can say from point A till point B, here it kept on going down. Now let's look at the point number B. Point number B, you see a one big green bar, which shows that yes, the closing prices were higher than the opening price. Now let's look at the momentum. It is showing it is trying to go up. The RSI is again trying to go up, and MACD is again trying to go up. So I can see that the price action is showing me positive, which is being further validated by the technical indicators. But as I mentioned, I do not want to commit my capital unless I get the confirmation. So I will wait for day 2, and day 2 I notice it is again going up. The lower price is way above than the higher price of the day 1, and it is going in the upper direction. It is being further confirmed by all my technical indicators. At this point in time, I want to commit my funds or commit my investments, because yes, technical indicators are showing that yes, it is showing a positive picture and you can commit. And at this point of time, if I will make an investment, I can see I have approximated at 1950 and till 20 to 50, which is a difference of like 300 rupees. Like we are talking about approximately 15 to 17%, and till this thing there is no issues, no challenges, and I can reach here. Now once we reach the point number C, I see that yes, I reached here. Although it is green, it is showing me green, but my technical indicators have started diverging from itself, from my price action, meaning it is showing that a momentum has started going down, my RSI has started going down, and my MACD is not going up anymore. It is flat. Okay, I will not take an exit, but yes, I am cautious here. The next day, what I noticed, that the opening, the wave is way below than the previous day close. Okay, it's fine. But again, what I see is the volume has gone down, and again my every indicator is going down. So this is the point I want to take an exit, because I want to save my capital, and as soon as I see anything negative, I want to take an exit. I do not want to wait, because my saving of capital, again I'm mentioning, saving of capital is more important than earning on capital, right? Now from here, if I see from point C to point D, it's again going down. So basically from 20 to 50 to approximately 2000, a fall of approximately 10%, and we reached here. Now let's look at the point D. You will see that although on the first day it's a green bar and it started going up, okay, but I will not take an action here. On day 2 it is a red bar, but the red bar, if you see, the technical indicators are showing that they want to go up. So even though it is a red bar, but yes, okay, I'm waiting. On day 3 I can see that the price have gone up and the prices are in the uptrend, but still, because previous day there was red bar, I will wait. On day 4 I noticed that there was a big jump and it directly went up, and everything is going up now. At this point of time I again want to commit my money in this particular stock. And so if you can see that with the help of technical indicators, how precisely you can time your entry, how precisely you can see that yes, this is a time I want to enter, and you get some kind of confidence in your investment decisions, that yes, whatever the decisions you are making, they are good and they are being supported by the price action, by volume, and by the technical indicators. I will take one more examples of Sun Pharmaceuticals. It is again, it's altogether different industry. It's coming from pharmaceuticals. So first we talked about Reliance, which is an oil and gas. Then we talked about TCS, which is IT, and now we are talking about Sun Pharmaceutical, which is a pharma company. If you see point A, so we first have a red bar. Again, the red bar means downtrend, which is big. We see a flat or downwards RSI, or and the MACD is trying to go down. Again, I will not take new positions, but yes, if I am holding any shares, I want to exit here. Coming to point B, on day 1 it is a red bar. Okay, I am not taking any decision, I do not want to commit any fund, but yes, what I see that yes, the indicators have started going up. On day 2 I see it is a green bar. Okay, it has started, the share has started showing strength, which is being followed, which is being supported by the technical indicators of momentum, RSI, and MACD. At this point of time I can take, but I'm still not committing my money. Let's look at a day 3, and day 3 also I get a confirmation that yes, it's going up, and at this point of time I can consider committing my money to the share, because I can see it's going up. So starting from approximately 390 rupees, after 440 rupees, so basically approximately 20% return in like 7 or 8 days, which is good return, right? And then you are taking decision by yourself, you are taking decision based on the indicators available in the market or available on the dashboard, and which are which enabling you to do the informed decisions. So uh, these are few of the things which I want to, this is the first part wherein I want to represent you that technical indicator help you, how technical indicator help you to make the investment decisions, right? But this is just the first part, and please do not start taking the decisions based on this is just to give you some idea how the things work. Eventually when I will be posting more videos, please try to understand the concepts, please try to learn them, and then once you are confident that yes, you have learned enough, then you might start take some small decisions or small investments based on that. Let's talk about technical analysis more detail, that what are the major premises of technical analysis. The first thing which technical analysis presumes, it says that the market discounts everything. What do you mean by market discount everything? It meaning to say that the price of a share, it represents everything, each and available information which is already available in public domain by way of newspaper or by way of notice or by way of announcements provided by the company. In addition, the prices also display the information which is not still available in public domain. How does it work? Basically, there are some market experts, there are some research analysts, there are some fundamental research people, there are some business community related people who understand the business in more detail than the general public, and who get a flavor of this knowledge, or they get this to know about this business even before anything happened. Just take an example, I will just take an example of Sun Pharmaceuticals. Imagine, or this is a pharmaceutical company, and it is majorly into export, and it exports approximately 100 shipments per week, and they are using a shipment company for this. Now suddenly the number of shipments increased from 100 to 150 per week. Now the employees of the shipping company, although they are not directly related with the Sun Pharmaceuticals, but they know that yes, the business have increased. Based on that, based on the common sense, they can make an assumption that yes, something is happening and the Sun Pharmaceutical business is growing. Now please understand, they they know this fact even before this information is publicly available, because it is not there in news. No company publishes their data on a weekly basis that how much are they exporting. Now this shipping company people, they know that yes, something is happening and they can start investing in the company, in the price, in the shares of Sun Pharmaceuticals. The only reason, they applied their common sense and they know something which not everyone is aware of. Let's take another example. uh, Maruti. Maruti is a car manufacturing company, right? And they procure their resources, they procure their raw material from like thousands of vendors who supply their products to Maruti. Now there is one vendor with whom they are all, or they are procuring material worth like 10 lakh rupees, or maybe 1 crore rupees per month, 10 lakh rupees per month. Let's take an example, 10 lakh rupees per month. But certainly what this vendors realize that Maruti is procuring material of like 13 or 15 lakh rupees per month. So he noticed that his sale to Maruti has increased by 50%. Now what is happening of this material? For sure Maruti is using, where Maruti is using, for sure manufacturing of cars. Why are they manufacturing so many cars? Because they are able to sell it. It means if they are able to sell more cars, it means they are making more money. Now this vendor or this small company, they come to know that yes, there is, the business is booming for Maruti, and now at this point of time they are free. They can take the decision that yes, because they understand the business is happening, that something is going good, they will start investing in the shares of Maruti. Now after 3 months, because the companies are required to publish their results on a quarterly basis, after 3 months when the results will come, you will be, the normal or general public will be able to see that yes, the business have increased and the Maruti has supplied so many cars. But it is late, it is already late, because the vendors and the other people who are related by different means or different ways, or maybe the fundamental analysts or research analysts, they come to know that yeah, they've already taken the decision, they've already taken the position, and now by the time we wait for the financial results, it's already done. So but one thing which cannot be hidden by anyone is the price action and the volume action. Anyone who is buying any share, it is reflected in the price and the volume, and by the study of price and volume, we are able to identify what is happening, right? So this is the reason, these are the indicators which are presented by technical analysis. Most of the time price action precedes a news. We will be taking an example on this going forward. Another premise is which on which technical analysis is based on is price moves in trend. What do you mean by price moves in trend? In your previous charts, you must have noticed that the prices are either going upwards, or they are coming to downwards, or they are staying flat. So prices never go haywire, basically one day up, one day high, one day, that is it never happens like that, because it happens sometimes, but in that case when the volatility is very high. And it is always recommended for the investors and for the traders that when the volatility is very high, we should stay away from the market, because in volatility, when there is no direction, there is no fun in investing. We should always invest when the volatility is low and the stocks are trending in a specific direction. Our investor or trader need to be in the direction of trend to make profit. Let's talk about the premise of market action discounts everything, right? Wherein I mentioned that yes, market prices, they know things which are available in public domain, as well as they know what is not there in the public domain. Let's talk about the prices of Reliance on 10th of July 2018. As on 10th of July 2018, the prices are 1025. On 28th of August, the prices reached to 1316, an increase of 30%. You can see that within a period of like approximately 50 days, a 30% return was given by Reliance Industries. What happened? Now here what is happening? We don't know what is the reason behind this price increase. Now we have discussed, and I mentioned in my previous slides, that market experts are aware of actions, developments in companies well before the knowledge in general public. Market price even take in consideration the future events which are not even in public domain. Let's see what happened. So by 28th of August, the prices have already increased by 30%. Let's see, is there something which happened after, which something happened after 28th of August, or something was brought in public domain. Yes. Result was declared for Q2. Basically, the period ended for September 31st, 30th. So there was a result declared in sometime in October first week. And what was the result? The result mentioned that there was an increase of 17.93% in the profit, and it also mentioned that the sale increased by 56%. Amazing, right? That the result came out in October, but the prices started to increase in July, and by the time of August they are already increased by 30%. None of the general public, no one knew about it, because no one knows, nothing is there in public domain. But as I mentioned, there are people who know things more than the general public, or people who research more, and they are aware of how the things are moving. So these are the 2 points which happened: increase in profit by 17.93% and increase in sales by 56.67%. These two factors itself represent that the prices already factored the future news and were in uptrend since July 2018. So hence we prove our premise that market action discounts everything. Now let's look at the another premise which talked about prices moves in trend. So for this thing, I am taking an example of gold prices just for an illustration purposes. So I am going to evaluate the gold prices movement during 2011 to 2020, a period of 10 years, and I will just try to understand and try to explain that how the prices move. Starting from September 2012 to December 2015, that is from September 2012 to December 2015, the prices were in downtrend, and they were in so downtrend that they came down from 1767 at this point, 1767. They were at 1767. From 1767 to came down to 1058 at this point in time, which is in December 2015. So it is a complete downtrend. Please notice that the prices are going in one single direction. Now starting from December 2015, till uh, till January 2019, till here, the prices were in a range. From here, from 16, they were prices were in a range, that is, they were very limited trading done, and there was a very close range of something 1058 to 1358 USD per ounce. Starting from May 2019, that is here, it again started going uptrend, and uptrend starting from 1650 USD in March 2020, it reached, and it started from 1350 USD in May 2019. So in a period of approximately 10 months, it increased by like $300, or approximately like 25%. A 25% increase in gold prices over a period of approximately 10 months. It is a good increase. Hence it shows that prices move in trend, and it always helps an investor to be in the direction of the trend, because if you are in the direction of trend, then only we are able to earn the money. Let's take one more example. Herein I will take an example of Nifty. Again, Nifty price movement during 2011 to 2020. Now starting from August 2013 to February 2015, which is here, the prices were in uptrend, and Nifty moved from 5440 to 8900 points. So it started at 5440 in August 2013, and it reached to 8900, approximately a rise of like 80% during a period of 2 years, or not even 2 years, approximately to a period of like 1.5 years, and the prices increased by 80%, right? So here you can see that it was an uptrend and the prices increased significantly during this period. Now from February 2015, from this point February 2015 to February 2016, over a period of 1 year, the prices fell down from 8900 to 6900. That is a drop of approximately 2000 points, which is approximately 25%. So during 1 year, the prices went down. So they were in a downtrend. And again, future prices, one moment of time they were in a uptrend, and now they're in downtrend. So what we discussed till now are the very basic concepts of technical analysis of the share prices, or technical analysis of any investment. So few of the things which we learned is, with the help of technical analysis, we can time the market, basically decide when to enter the market and to when to exit. We can identify the investment opportunities with a limited time availability. Also, we can also define at what price we want to enter and what price we want to exit, as well as we can make the informed decisions. One more thing, one most important thing which we learned is that the market knows each and everything even before the information is made available in the public. So yes, these are the basic concepts of investing technical analysis. We will be learning more in more videos which I will be uploading going forward, and hopefully we will learn together, and then we will grow together on these concepts of technical analysis. If you have any comments, or if you want me to provide any further details on any of the topics related to this video, please let me know in comments by way of suggestion, and I will try to provide the clarification or try to make a video to provide more details. Thank you for listening. Thank you for being available, and safe investing. Thank you.